All right, what's going on, everyone? This is Kev from Kevin's Corner, where I try to make sense out of nonsense. You know how I do it. And I got somebody here today that is also going to be making some sense out of nonsense. And it's none other than Collin Plume from Noble Gold. And y'all been hearing me say things about Noble Gold in my latest videos and even in the past. So you're familiar with it. But you know what? I got some shenanigans going on here right now, Colin, with my two dogs. They're gonna get a spanking right on TV if they don't cut it. They're down there having too much fun. Cut it out. Anyway, it's good to see you again, man. How's
Yeah,
everything been going?
everything's great. Yeah, no, just been it's been exciting news, and everything is. I just can't. There's so much information coming in that I'm just it's nonstop. So I'm in between interviews and business and everything. I'm just trying to consume everything and make sure I'm on top of what's happening with our economy and precious metals and Doge and everything that's out there. So it's been an exciting. This year's been fascinating in terms of the news.
Yes, it has. So let me ask you. First of all, the results of the election. Are you pleased with those results?
It was exactly what I thought was going to happen.
Okay.
And yeah, I mean, if you believe in sound money principles, then this is the way that you wanted it to go. If you want to get back to, an economy where it makes, I'm not super political. I'm a I would say an economist, someone that lives in the world of money and what money is. And so I'm more focused on, how do we get back to a strong economy? How do we get back to a point where people can afford things again, day to day cost of living, um, and just the spending, the absolute atrocious amount of waste that we've done as a country was always bothering me, and I'm hoping that at least some of it's going to get fixed.
Yeah. Well, it looked like they're doing a pretty good job trying to fix it with Doge, even though there are some people who don't like it. So the this new administration, how does that impact your industry?
Well,
Do you think it's going to impact it in a positive way, or just
yeah.
remain the same, or what?
Well, I think first, his President Trump's big agenda has been, focus on getting manufacturing back here. And his belief, to get manufacturing back here, you have to do tariffs. That's the only way it's going to work. And tariffs are inflationary. They're something that will increase the cost of goods. There's no if, ands, or buts about it. The idea is that when it arrives here in this country, there's a tax on it, right? And that the person that brought it in pays it, and then they're going to charge the consumer more money for the
Right.
item. I mean, there's no there's no
Right.
sugarcoating that idea.
Uh-huh.
And so inflation is something that has been sticky. It hasn't gone down. Last month it was closer to 3%. It went up, actually. So that specific agenda in the short term will make things more expensive. And you've seen the reaction, what's happened in London. Basically, investors that had credit on gold, where they own contracts on gold, were very fearful that they were going to do a tariff on gold. So they started shipping all their gold to the United States, and the London Bullion Exchange ran short on gold. They didn't have enough gold. And people were like, where's all the gold? Where's the gold happening? And so you have this massive amount of money where people thought they had gold stored in this exchange in London, and there was not enough gold backing up these contracts. So people were very fearful. And there was reports of, the people calling and them saying, well, we'll get it in 4 weeks or 6 weeks or 8 weeks. Well, when they bought those contracts, they didn't think that they were contracts that weren't there. They thought they were stored there. And this has been something that's always been talked about since I've been in precious metals, that unless you own it and you have it yourself, you don't really own it, right? You don't really know what's there. You don't really know what they have. So that first thing really caused some pandemonium. And obviously you've seen the price of gold react to that idea that some of these exchanges may not have enough gold to back up all the contracts that people are buying. And that caused the price to surge. And so, gold has reacted positively to the new administration. It's I mean, it's reacted positively over the last 3 years. I mean, gold's up from January last year to today. Gold is up 46%.
Wow.
So it's beat the
Okay.
S&P. It's beat many of the indexes. So gold has performed very well. So just fundamentally price-wise, it's done well, but the demand is also very high right now.
Uh-huh.
So that's the first thing that I've noticed, just fundamentally, is that we've had a rush on people that want to have their gold more in their hands or closer to home. So they've been repatriating the gold back here to the U.S. and moving it from London to the Bank of New York, and that's caused quite a stir and excitement for the precious metals business.
So if I'm understanding correctly, when someone invests in gold, and if they over there in England, I guess, or wherever you just mentioned, if they want their gold, you're telling me that they didn't actually have the gold there, or wow.
Correct. They were buying a contract that they thought was backed by physical gold. It was supposed to be backed ounce to ounce. But what happened was once they started to ship, and they had to ship in such large amounts, they've never had the amount of outflows from the London exchange that they've never seen it. And they started to realize that there wasn't enough gold backing up all the contracts. So people obviously got more afraid and more afraid and more fearful, similar to like a bank run. You know, when you go to the bank and you try to get your money out, but you really, if you know anything about the U.S. banking system, is that it's a fractional reserve banking system. They don't have, if you have $10,000 there, they don't have $10,000. They have $1,000, right? They've lent
Yeah.
the other $9,000 out. It's similar. What it turns out is it's similar to this exchange. And so there's been a lot of concern about that. And people don't realize that in a physical item like gold, when you buy it on an exchange, like it seems easy and you do it on an app or you do it through your Schwab account, but it defeats really the whole purpose of why you're buying gold. You're buying gold as a protection. You're buying it as insurance. And when you're buying on an exchange, you're allowing a third party to restrict the actual insurance that you have. You're not actually owning it by yourself. And so it doesn't really achieve the thing that you're trying to do. The thing you're trying to do is protect yourself. So if you have all these assets and you're like, I want to buy some gold to protect everything else, if you're buying it through a swap or an exchange, or you're not really owning the real thing, which in today's day and age, you need to own the real thing. You can't
Yeah,
trust.
that's what I was thinking. I mean,
Yeah.
can you actually buy it and have it physically with you? Say, I mean, I know it might sound crazy, but if I'm a skeptic and I say, well, if I want to get my gold out, or say something like what just happens and they've run out of gold, first of all, who insures that gold? I mean, are they just temporarily saying we'll get your gold, or is there ever a possibility where they say sorry and then you got to kick some butt?
Yeah, I think there's absolutely a possibility that they're even saying in this Fort Knox audit that we may not have enough gold, that they don't. Elon Musk basically on X said, he reacted to a Zero Hedge article and then said, with a South Park meme, basically said like, and there's no gold. I mean, even he alluded to the idea that maybe there's not enough gold in Fort Knox. So there is a lot of this happening, and this stuff has been reported for years. But now I think because there's so much distrust, because we're so much in debt, that the balloon has gotten so big that we're really looking at what assets we have as a country. And that's why you're seeing people really say, like, I want to know what I have. I want to know what I own. And they're saying, I want to see what's in Fort Knox. These things
Right.
haven't been done. They haven't audited Fort Knox in 50 years.
Wow.
So these are the types of things that are happening when you're seeing a reset in the economy. We're seeing a reset happen, and it's because people have lost faith in our currency. We've gotten so fat and heavy, and it's every great economy or every great nation in history has fallen to this, where they've spent too much money. The Romans, I mean, you go down the line. I talk about it a lot in my book. I talk about many of the most powerful nations in the world that really lost all their power because they devalued their currency and they were too bloated, basically, as a country. And it's it's exactly what's happened to us. We've become too bloated. And so now we're in a position where we're trying to make sure that we could cover our debts, make sure that we're solvent. And Doge is starting to do these things, but it may be too late is what I believe, because as much as we want to believe that we could fix things now,
Mhm.
we're paying $1.4 trillion per year in debt service on our debt, which
Right.
doesn't factor all the unfunded liabilities like Medicare and Medicaid and Social Security. It doesn't factor all of that into it. It's just the debt that we've accumulated because we're borrowing so much.
Right.
So, these are the things that I look at, and I try to understand. And I think the economy, you can't take the economy at face value and say like, oh, unemployment's below 4% and inflation's at 2.9 and the stock market's good, so everything's fine. I think you have to read between the lines. I've really looked at the data, and I think that'll give you a better indication of what's happening with the economy.
So what's the solution if Doge continues the way they're going? When it comes down to, well, first of all, I'm assuming without Doge, if we wouldn't have found this out, we would have been up Crap Creek a lot sooner. I would
Correct.
assume.
Correct.
But
Correct.
even with their efforts, what do you think is a rational solution to protect one's investments? I mean, you got all these different things floating out there. You got crypto, you've got
Yeah.
gold and silver.
Yeah.
And if the dollar isn't that stable, how do you protect yourself? How would, like, for example, investing in silver and gold right now protect you, especially considering what just happened with the gold over there? I mean, would I need to invest and take all my gold like Scrooge McDuck and hide it in my basement?
That's the safest way. Yeah. I mean, we do segregated storage in a private depository. So we know what we have and we audit it. We audit it monthly. So you can get an idea of what's actually there. We have insurance. So that is one way to do it. You can obviously take possession. I think what you have to think about is just if you take a step back and you go, okay, here's a few things to think about. Credit card delinquencies are at 11% high right now, last quarter of last year. Average interest rate on a credit card, 21%. We're seeing delinquencies, and delinquencies are 90 days. I mean, they're basically 90 days out. They're stopping paying. We're seeing that balloon happen. So not only the government debt, now you have personal debt, consumer debt, right? Credit card delinquencies are really skyrocketing. And those, when you're in 21, 25, 30% range in terms of rates, 2 to 3 years, you're doubling your what you owe, right? Every 2 to 3 years with those kind of rates. So it's quite scary, and you can't really dig out of that hole. So you have that thing. That's the undercurrent of what's really happening. And then you have Warren Buffett, maybe the greatest investor in the history. For 9 straight quarters, he's been selling stocks, selling. He's accumulated the most U.S. treasuries in the history of him as an investor. He has over $300 billion in U.S. treasuries. So he's basically sitting in cash, and he's just taking his chips off the table. He's pulling his chips off, selling Citigroup, selling Apple, selling other tech stocks, selling banks, selling. The biggest stock investor in the world is selling. So you have credit card skyrocketing. He's obviously seeing those numbers. You have the biggest investor in the world going into treasury bonds, which he doesn't want to own treasury bonds. You have the 10-year treasury at 4.7. Now, I've had people say, well, that's great. That's a great return. I want to get 4.7%. It's a 10-year treasury. So if you buy a 10-year treasury at 4.7% and inflation goes up, if it goes to 8, 9, 10, 11%, you're losing, right? It
Right.
only benefits you if inflation goes back down. Now, the 10-year treasury market is going up, which means there's more sellers than buyers. So these bond people, the richest, smartest endowments, all these endowments that buy bonds. I mean, that's what Harvard and all these institutes, that's all they do. They have a portion of their portfolio in bonds. They're avoiding the 10-year. It's going up, which means they think it's going to go higher. They think the 10-year is going to go higher, not lower. And then the Fed is in this predicament where they want the 10-year to go lower because the 10-year is how the 30-year mortgage goes lower, right? They want to get that 10-year down to 3. So this real estate market opens up. So President Trump has come into a bag of debt, basically. He's having to dig his way out of a bag of debt. And so what I would say is that for people that, are looking at this, the smart money is saying this is going to take many years to fix. This is not a 1 year. There's no way that he can fix this in one person can fix this in 1 year. We are going to chip away at it, but we're going to go through, we have not hit the bottom yet. And it seems like the smart money is getting out of equities and they're bracing for a correction because that's the only thing that makes sense for Warren Buffett. Why would he sell US bank stocks and Apple and things that he really believes in unless he thought there was a correction and he'll be able to buy them at a lower price, which is basically his entire philosophy is to buy when it's low, when it's undervalued, to find opportunities. That's how he's made his wealth. So he obviously believes the equity market the valuations are not attractive anymore. So
Is there,
yeah,
I was going to say, is there any possibility he could be wrong this time?
well, yeah, I guess he could. Yeah, you're right. He could be wrong. He could have missed an opportunity, but I would say that if he felt more confident, he's already wealthy and he's, I think, 90 years old. There's no reason for him to sell.
Right. Yeah.
The last time we went through an economic crisis in 2009, he was very confident about the stock market. If you look at him getting interviewed from 2009 to 2012, he's like, there's no better place to be than US equities. He kept saying it. And that was right after we collapsed. I mean, the stock market had already collapsed. He's like, it doesn't matter. It's still undervalued. And he was right. He was right then. And he kept in and he bought and he added and he did. And so he's changing his tune now. So it doesn't make sense. Also, the U.S. Treasury, very interestingly, they talk about gold to silver ratios. The U.S. Treasury from last year, the statistics are they bought over $400 million in silver. So there's a 4-to-1 silver to gold ratio for the U.S. Treasury, which that means is the U.S. Treasury buys gold and silver just for their own use, industrial use. And for years and years, they always bought more gold and gold. Last year, they switched heavier on silver. And part of it, I believe, and I talk about a lot in my book, and they do mention that part of it is for defense. But we don't know how much silver is used in our defense systems. We don't know how much is used in warheads. We don't know how much is used in drones. We know it's a lot, and we know we can't get the data, which also makes me believe it's a lot because they don't want to release how much it is. But the U.S. Treasury is buying silver as an industrial metal. So I think the U.S. opportunity is seeing that we need to buy as much silver as we can. As much as we're talking about gold and gold is in the news, we need to buy silver because we actually really need silver right now to survive. And we need silver for the things that we need as a government. So this silver boom, this silver opportunity is right here. And I truly believe that they're buying it. They're trying to buy as much as they can quietly. Everyone's talking about gold. But I think behind the scenes, they're really seeing the opportunity in buying silver right now because they believe it's undervalued.
So right now, then, if one was to have a choice between investing in silver or gold, you think silver is the hot way to go right now?
Yeah. If you never bought gold, you should always own gold. I always believe you should always have some gold. Every billionaire that believes in tangible investments will tell you. Ray Dalio, Paul Tudor Jones. I mean, it's interesting because these guys are hedge fund turned gold and silver and precious metals buffs. So these are people that have taken the largest risks. Hedge funds, they hedge their bet against either way, right? They take chances, and that's how they've accumulated to become billionaires. The biggest billionaire hedge fund guys that have turned into gold buffs and silver buffs always say, you got to have some gold. It's just paramount to your portfolio. You have to have a portion. And even if you go back over time, if you look at when we got off the gold standard in the early 70s, and you look at those bond traders and those early traders, they always would say having 6, 7, 8% of your portfolio in gold is where you're going to be at. Now, that changed a lot. People got into other equities, they got more risk averse. And you saw what happens when people get so risk averse that they've lost out, and we've had some really big booms and busts. But the fundamentals are you should always have gold. But the bigger opportunity, if you're just saying opportunity, in my opinion, the opportunity, and I lay this out in pretty good detail in my book, the opportunity is absolutely in silver. And I think we're going to go through a commodities super cycle. And I think silver, and I also think copper, these are going to be unbelievable opportunities right now. We don't sell copper. Obviously, it's too small. It wouldn't make sense. But silver as an industrial metal, silver as a hedge, I do think silver is a really interesting opportunity right now.
Well, speaking of silver,
There you
yeah,
go.
look
I
at
like
that.
it. Beautiful.
Yeah, I actually took this to a coin expert, and they tried to offer me quite a bit of money for this.
Oh, I'm sure they did. Yeah, I'm sure. Yeah, this is this coin. The detail on this coin is unbelievable. We don't even have these anymore. I don't even. We got so many of these. We sold so many of these. But yeah, no, I think silver bullion, and also on top of that, Kevin, I'll tell you, the opportunity in terms of the actual metal costs relative to the spot price. So, most through my 16 years in the business, silver coins and bars sell above the spot price, and they still do. But relative to the spot price, it's never been a better time to buy because the prices are very good right now. There was a lot of silver that came out last year. There's a lot of products. So you can get silver coins and bars at unbelievable prices. So
Really?
I know people say they want to buy the SLV, they want to buy in the stock exchange, but if they've never acquired it in the physical, they don't have any in their safe, they've never done it. This is an amazing, or if they want to do an IRA, this is a really amazing time to acquire physical silver.
Oh, okay. Now, so if I'm understanding, when you guys receive your silver or you buy gold or silver to sell, um, does that supply come from within the states, or do you actually buy from a miner or something overseas? And then would you have to also be impacted by, say, tariffs, bringing that into our country?
Great question. Yeah, no, there's a lot of speculation about, because 75% of the silver that's used in the U.S. is shipped from Mexico. So there's been a lot of concern if they do tariffs. They haven't said directly. They've talked about aluminum. They've talked about steel. They haven't said anything directly about silver. We do get our metal from all over the world. We do get a lot of it from mints here in the U.S. But in terms of getting, like this coin, surprisingly enough, this Thomas Jefferson coin that we made, this is actually made in Europe. So sometimes you have amazing mints that have just incredible artists all over the world. So we source it from everywhere. We bring it into our vaults. We verify, authenticate it, make sure it's the same purity that you need and are required. We make sure that it's real. It's not tungsten or any of those other things that can happen. And then, we sell it to clients. Also, us being able to buy from anywhere in the world means we get the best pricing on product. And we've been doing that for many years. Also, there was a time during the pandemic where you couldn't get silver from anywhere in the U.S. The U.S. Mint didn't have it. So we really had to expand. So we were getting silver from many mints all over the world. And the quality is high, and I've gone to these mints and see how they put their metals together and the refining process. So, we've been creative. Ultimately, as long as the purity is right and we can authenticate it and it's from a reputable mint, we use mints from all over. The U.S. doesn't mint bars actually, and so the U.S. coinage that comes from the U.S. Mint at one point was so expensive relative to the price of silver that we weren't recommending anyone to buy it because they could pick up bars with higher purity at 20 or 30% less. So we've always tried to get them into the right product at the right time. Now I would say Silver Eagles and some of those products have come down in price, so they're a little bit better priced. But there was a point where it just didn't make sense for a consumer to buy them because if you were just trying to get as many ounces as possible, you want to get the most value, we would put you into a bar that had the same purity or if not better, and also was substantially less expensive ounce for ounce.
Okay, so say I am a first-time investor. What's a good place to start, and how does your company walk a first-time investor through the process to
Yeah, so
make it make sense? And actually, what would be a good amount to even start with that would make sense?
our typical minimum is $10,000,
Mhm.
just because we offer a high level of service. It's very concierge. There's companies that will do less, but you point and click and you don't really get a person. With us, you get a person, you get a customer service rep, and they're with you for as long as you own gold and silver. If you have an IRA, they're with you forever. So we offer that lifetime service. So you call us, we walk you through the process, and you build a connection with someone at our company, with Josh or Hope or one of the sales associates, and they're going to spend a lot of time with you and explain what we do. They're also owners of precious metals. They own the same thing that you're going to buy. And they're going to walk you through all the different options and ultimately give you the pros and cons of owning precious metals. Once you decide, you wire us, however you send us the funds, and then we're shipping right now within 1 week of funds coming in to your doorstep. We ship in a very discreet package. We send out a tracking number. We call you. And we have a very unique shipping process that we really kind of hound you to make sure that it gets there and it's perfect. So we have a person that keeps calling you just to make sure you pick up, you see your tracking number, and then when it comes in, you sign for the package. And then we ask you to open it up and verify everything in the package. And we've sold over $2 billion in gold and silver in the last 8 years, and we've shipped over $1.2 billion. And surprisingly, it's been very smooth. I mean, people always ask me, like, how does it go and this and that. And, we have a unique process, and the way we put it in the package is tight and sealed. And it takes you a while to open it up. So we do it in a very unique way. And, knock on wood, we've been very lucky, and it's been a very smooth process for everybody.
Okay, so let me throw a scenario out there. All right, the dollar collapses, the grid goes down. You're sitting there with a whole bunch of gold and silver in your house as a protection for financially or for your investment. How does that benefit you in the worst, say maybe one of the worst case scenarios where our economy just collapses? I mean, I would assume we exchange gold for money so we can buy. But what
Right.
do we do with the gold if
If the
the
dollar
dollar
collapses.
goes belly up?
It's a great question. And I will say, I mean, we've never had a complete collapse of the dollar. We've had systematic collapses. I mean, if you say the dollar from today, from 100 years ago, it's down 97%. So it's been slowly eroding over the last 100 years. I think there's always a market for gold and silver, and there's always been a market. I mean, there is an exchange for gold and silver everywhere. Everybody wants these things. So the only time that I think there was sort of a collapse last time was the late 1970s, early 1980s. Inflation was at 15, 16%. Gold was just going through the roof. I mean, it was really just skyrocketing at that point because our dollar was just, losing so much value, and inflation was going so crazy. So I think there's always some medium of exchange that's available. I do think that's why you want to have some silver, because this silver coin's worth, $36. Even if silver's worth, I'm anticipating silver to be worth about $58 or $59 in the next 2 or 3 years. So even if it's worth $60 or $62, let's say this coin, it's still a relatively good price for bartering and trading.
Yeah.
It makes sense. You could still buy things with this. And now they're talking about getting rid of the penny and all this stuff. So I think what would end up happening is that you turn it in, and then, there's some kind of exchange where it goes digital back to you. Because I do think at some point, maybe the dollar is not what it is. Maybe we're not carrying physical dollars anymore. But ultimately, this will always be something that is exchanged and desirable, because it's not only money, but it's used in industry too. And so they
Right.
need it out there. And that's what makes gold and silver really unique in terms of commodities, because oil is not money, right? But gold is money. It's always been money. Gold is money and everything else is credit, is what JP Morgan said. So I think that's something that people need to keep in mind, is that no matter what we're using and exchanging, this will always be considered money.
Good answer. So tell me then about this book. I see you got yourself a new book. You got it. I can't quite see the title, but
it's called Silver is the New Oil, and it's on Amazon. You can also get it on our if you contact our company, we can get you a code to get a discount. It's a really quick overview of what I think happened during the pandemic and why we've gotten into this mess, which is, free money and, just not creating an economy that's sustainable, to where the opportunity in silver is and why I think it's, the super cycle commodity of the future. And then I just give some tips of ways that I've been able to create wealth. I also, in the end chapter, I talk about some opportunities in real estate that are proving. I released the book in December. There's some opportunities in there that I've taken advantage of already. Some cities that I think there's opportunities in. These are actually like the cities to buy in, not like these are just, oh, you should go buy a rental property. It's like actual tips. And then I just talk about the alternative investment opportunity and some of the things that people are missing about why it's important. But it's an easy read. I've been reading it to my 8-year-old, and besides a few words here or there, he's been able to understand it. So for anybody that's looking to get educated on something, I wanted to make it a book about silver because everybody really always talks about gold. And so I really wanted a book that just really focuses on silver. And so, it's on Amazon. It hit #1 in December for commodities, for new releases. Yeah. So that was great. So far so good. People are enjoying it. It's my first foray in writing, so I'm excited. And I got another one that I'm working on. So it's going well.
So before we get out of here, is there anything that you would want my audience to know right now that is maybe current going on with your company, or any suggestions, anything we might have missed that you would want my audience to be aware of and informed of?
Yeah, I think sometimes the simplest thing is right in front of you. People always look for a complicated answer to a simple question. And so I think the simple truth is that we're in an inflationary period. You should look at ways to protect yourselves against inflation. And there's a few good ways to do it. It's buying assets and creating business opportunities for yourself, creating business. Those are really the only 2 ways you can protect yourself against heavy inflation. And those are the things that you should be focused on.
Wow. Sounds good, man. I tell you, I'm gonna have to get the book then. Maybe it'll make me rich, Collin. Maybe it'll make me rich. I don't know.
It will make you, if nothing else, you'll be educated and you'll learn a few things in there that I think will surprise you.
That's good stuff. So are we going to get together again and do a part 2 of this?
Let's do it. I love it. Sounds good to me. I'd love to do it.
Wonderful. I tell you what, I'm sure we'll be communicating via email, and we'll get together and do another interview because it's very informative. Now, ladies and gents, for the next interview, I want y'all to put together some questions that you might have. Okay, this way I can throw some questions, some curveballs, and see where we go with that. So we're going to get back maybe early next month or something like that.
Yeah, sounds good.
That sounds good
to me. Yeah.
Right. Well, ladies and gentlemen, you've been listening to Kevin and Collin talking about money. Money in the form of gold and silver. That is
real money. Real money.
Real money. Right. Yeah. So I'm definitely going to continue enjoying the stuff that y'all sent me. I got some gold right here. Wonderful, wonderful gold. Matter of fact, I think this one is the United We Stand.
Oh, nice. Okay.
Nice. Yep. Yeah. So I got some wonderful things here that you guys sent me. And I look forward to us getting together again and hashing some stuff out and see if we can philosophize on how we can all invest and make sure we're protected. So
thank you, Kevin. Appreciate it.
No problem, man. Thank you. All right, let's do it again real soon. All right, God bless everyone. Say goodbye to Collin, and we'll be doing it again very, very soon. Okay. Take care.